Hi, welcome back to my channel. Today's video is going to be a little bit shorter. We're going to talk about why Amazon may be an undervalued stock even at $2,300. We're going to talk about the bond that I actually purchased last week and what Bitcoin's been doing. So before that, we'll talk about the last week as a whole. I did go ahead and deposit another $150 into my account. My total investment is now $4,600. I'm getting really close to that $5,000 mark, and I believe that I should be there by next week. With that $150, I purchased $50 worth of Bitcoin at a price of $87.7450, which bought me 0.0057 Bitcoin, meaning my new position is 0.1069 Bitcoin. So about 10.5% of a single Bitcoin right now. That halving is going to happen probably about next week. I've seen estimates between the 11th and the 12th, so I'm really excited about that. Next up, my larger purchase of the week was JNK, which is a bond. We're going to talk about that later in the video. I purchased one share there at $97.48. Because my portfolio is so Bitcoin heavy right now, I'm looking for something to balance it out. But on the week, we can see that I'm down about 3.5%, which isn't great, but the market has been pretty sporadic in that time period. For the last month, I'm up about 9.5%, 3 months down about 12%, over the last year down 6%, and now all time down just over 6%. So of course, not where I want to be, but like I've said the last couple videos, I think that we can see the graph that I'm moving in the upward direction, starting to recoup some of those losses, and hopefully within the next week or two, I should be in the green finally. Now we're going to talk about why Amazon has done so well. Here I have an article from Benzinga talking about why Amazon has actually won this pandemic right now. So as the article says, the pandemic has brought historic levels of disruption to every area of business, but the pandemic has actually been good for a small number of companies such as eBay and Etsy, but Amazon has emerged as the biggest winner of that group. Clearly, these are all online companies that are selling things, so there's a very common theme here. It says, already the world's richest man, Bezos, has seen his fortune expand by $13 billion as Amazon's share price hit new highs. When it comes to billionaires, he is the biggest winner of the COVID-19 pandemic, during which his wealth increased by $308 billion. If I'm not mistaken, that number is correct. It should be $308 million or even $3 billion, but certainly his net worth is around $120 billion right now, so it did not increase by $308 billion. First quarter earnings. Overall revenue increased to $75.4 billion, up 26% compared to the same time last year. For a business that's been growing as relentlessly as Amazon has over the previous decade, that figure is impressive. The earnings fell 29% and came in below analyst estimates. Amazon has never been a company worried about profitability. They're going to make the money. The most important part is here. The cloud is heating up. They said, once again, Amazon Web Services proved its dominance. Revenue in the segment topped $10 billion for the first time and rose 33% on a year-over-year basis. Two largest clients, Netflix and the World Health Organization, has been the company's biggest growth driver for years. However, their reign as kings of the cloud could be in jeopardy. Despite succeeding in having the Jedi contract that Microsoft once suspended, Amazon is running out of ways to stop it. Again, I hold Microsoft because I think that's another great company for the long term. Both of them very strong in the cloud infrastructure aspect, and we know that that's going to be huge in both the domestic economy and the global economy in the years ahead. Here it says, challenges ahead. CEO Jeff Bezos said on the call they plan to suspend $4 billion on COVID-19 related expenses. To put matters into perspective, this figure will be equal to Amazon's entire profit for the next quarter. It needs to deliver products to customers during these government-imposed measures, but also keep employees safe. Then they go on to talk about the protests happening. The reason that I'm not super concerned about this is that, again, the cloud infrastructure is where they're making the vast majority of their money. People don't realize it, but the last time I checked, it was between 80 and 85% of their money being made was from cloud infrastructure and not from people buying things online. But now we'll take a look at the stock itself. But first, make sure to like the video, subscribe to the channel, and comment down below what you want to see next. And here we can see that Amazon's trading for $23.45 right now, up about 1.5% on the day and then down a little bit after hours. But over the last week, they still have had a little bit of a drop, but as I said, the market struggled. When we start to zoom out to the last month or 3 months, we can see that they've done well when other companies have not. And even over the past year, we can see that when other companies struggled and had this large drop off in February and March, they were affected somewhat, dropping here down to 1676. But have rebounded quite well and have actually reached new all-time highs. So at 450% over the past 5 years. I would love to say that I can purchase a share of Amazon right now, but clearly with my portfolio being at just under $5,000, it's not super feasible, but I'm hoping to get there as fast as possible. Price to earnings ratio is 110. Most people would say that's a huge issue, but again, with that cloud infrastructure being the basis of them making their money, I'm not horribly concerned about that. But now if we go look at the analyst ratings, we can see 91% buy rating, 6% hold rating, 2% sell rating. And those earnings, as that article explained, are down, but the earnings have been fairly consistent. And like I said, I think there's a lot to like about Amazon, which is why I'm going to do everything possible to try to purchase a share within the next year, because it can only go so much higher. Now onto my portfolio as a whole, we're going to talk about VTI, my second largest stock holding. Total return here is now minus $19.33, or down 4.3%, about $143 right now. But when we look at the last week, we can see it's down. Most stocks have done that. Over the past month, up 4.5%. Over the past 3 months, down 15%. Over the last year, down 4%, which is not good to see. But over the last 5 years, still up 31%. The reason that I like to look at this one is it's a very good indicator of the market, as this is a total stock market ETF from Vanguard. I would say that I'm generally pretty pleased with this, and it does pay a pretty decent dividend quarterly. I did buy a share of this a couple weeks ago if you've been following along with my videos. So I've got 3 shares at $149.32. Makes up about 10% of my portfolio. I don't have anything that is a huge portion of my portfolio right now. My largest holding would actually be Bitcoin, and it makes up less than a quarter of my portfolio. Next is my third largest holding, Vivint Solar, trading for $6.26 right now. We can see my total return is down $24. But if you've been following along, Vivint Solar's been all over the place. I just want to talk about this one because of how drastic these changes can be and how quickly things can change. So we can see up about 5.7% during the day today, down 1.3% after hours. When we zoom to the last month, we can see up and down and up and down, but in a growth direction. Over the past 3 months, terrible, down 33%, up only about 1% over the past year, and over the past 5 years, down 55%. We can see slowly growing here, and then the large drop off when the rest of the market struggled. The reason that I want to talk about this one is my average cost is now $6.74 on those 50 shares, and it's trading at $6.26, so I am losing money, but it is feasible to at least break even on this one. The interesting thing is at the end of this week, or rather the beginning of next week, that earnings call and everything should be out. So they're estimating a 9-cent loss per share, and we can see that Vivint Solar has actually not been able to turn a profit in a single quarter. We're hoping that that will change. They've restructured some debt, and that's going to be huge for them. I say it every single quarter, but it's really a stock that I think I'm just going to sit on and try to figure out what's happening in terms of the market as a whole. Next, we have CocaCola, which is pretty interesting. I am down $60 on this one all time. It has had a pretty drastic drop off in the last week because Coca-Cola did cut their expectations globally. Clearly, with everything going on and people not leaving the house, they're not going out and buying soda. They're not going to movies. They're not going to sports games. And this has hurt both Coca-Cola and Pepsi a lot. So over the last week, as I said, down about 5%. Last month, down about 6.5%. 3 months, down 24%. On the last year, down 7.5%. Last 5 years, they still are up 10%. This is a dividend king, and that's really the largest reason why I still have Coca-Cola in my portfolio. That being said, I think I'm going to hold on to this. As soon as everything returns to normal, or at least somewhat normal, I think this is going to be a good one to hold on to because of that increasing dividend, because Coca-Cola does such a good job with moving things around. Now, if we go down to their earnings, we can see their last earnings call was April 21st. I missed that in my last video. They did beat the estimated earnings per share. The problem being that they cut their estimates for next year and even the 2 to 5 year outlook, which is pretty common among a lot of companies right now. And as we move on, we're going to talk about Sony. Of course, with the PlayStation 5 coming out at the end of the year, I always like to check back on this one. I am still up $16 or about 15% on this stock all time, trading for about $64 right now on the last week. It is down over the past month. It's only up a little bit. 3 months down 10%, very indicative of the markets themselves. Up 31% on the last year, which is great to see, and about 110% over the past 5 years. Average cost was down there at $56, so this has been a good one for me. And the good news is that Sony, being in the technology industry and really consumer products, as you can see at the top of the screen, this means that Sony's not going to have a huge hit when people stay home. Now, if we go down and look at their earnings, we can see they will be available next week, but we've got this sort of slow growth trend going on with Sony, which is something that I'm going to continue to monitor. Of course, that would be reporting their earnings for Q4 of 2019, which means that we won't know exactly how this whole pandemic situation is going to affect them until their next earnings call, or even 2 earnings calls from now. That being said, I do like Sony, and I'm hoping that I can purchase more shares in the future, but let me know what you think. And the last stock we're going to get to, I promised that we'd get here eventually, is SPDR, Bloomberg Barclays High Yield Bond ETF, otherwise known as JNK. This is the first bond that I've actually purchased, and it's not a specific bond, it's a bond ETF. As I mentioned before, because Bitcoin is so sporadic and you never know what's going to happen, I want to have something in my portfolio that's going to be a little bit more steady. So we can see total return is now minus 28 cents, which is almost nothing. On the week, down 1.5%, which is actually quite a bit. For a bond, up 3% on the month, down 11% over the last 3 months, down 10% on the year. In the past 5 years, down 17.75%. So we can see, even though it has sort of been struggling over the past 5 years, we can see that with bonds, it's a much slower gain and it's a much slower demise. Things are just going to move much more slowly. Of course, this large drop-off being different. So it was trading as high as about $115 there, down to 97. The reason this is so interesting is if we scroll down, we can see the dividend yield is up over 6% right now. Because this is a bond, we know that it's going to pay a consistent dividend. I'm not concerned about this one at all. It should, or rather it started at about $100 per share. And of course, with that 6% dividend yield, it's not going to be the greatest investment in the world, especially when you consider taxes. But again, the consistency here was what I'm looking for, especially when Bitcoin makes up such a large part of my portfolio. Speaking of Bitcoin, this is going to be the last one we'll talk about today, trading at about $9,310 right now. Total return is now positive, plus $44. My total equity is teetering around $1,000 right now, which is awesome to see. Average cost is down to $88.90. Certainly going forward, that average cost is probably going to be heading upward as opposed to downward. As we get closer to this halving, the price is projected to reach about $10,000 by next week, and of course to the moon by the end of next year. That's what some people think. Certainly being a large shareholder, I hope so, but we just don't know yet. The big reason, as I always like to say, is that with the government's fiscal policy of continuing to print money and increase the money supply, Bitcoin is really I don't want to say government, it's certainly anti-establishment and runs differently. We know exactly how many coins there are going to be, 21 million. And we know exactly when it's going to reach that peak, around 2130. So if we look at the past week, this growth is only about 1%. When we zoom out to the month, it's much more interesting at about 28%. Or the last 3 months, still down 5%. But the year and 5 years is where people are going to make the vast majority of the money, up 63% on the year, up almost 4,000% over the past 5 years. So if nothing else, continue to watch my channel because Bitcoin. There's a lot of interesting things going on with Bitcoin, and I think a lot of people would like to know more about it.